9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Asian tech stocks surging. That's an understatement when you look at this board coming up. Tracking the rebound in U.S. chip makers amid solid spending forecasts coming through, of course, from U.S. big tech, Microsoft, and now Amazon. Kospi, as you can see, is up 16%, and Chinese equities are set to outperform the U.S. for a fifth straight week.
We're on watch for the BOJ after a source confirms official intervention in the yen, the currency holding on to gains following its biggest jump in 2 years.
Also ahead, China's Politburo voices concern over slowing economic growth, but holds off on fresh stimulus measures.
And Bloomberg learns that DeepSeek is building what would be one of China's biggest AI data centers as it seeks to stay competitive with Silicon Valley. All right, trying to wrap my head on all the things that we have to talk about here.
I'm grabbing my desk.
We're still pointing to new breaking news in our IB chat as this week. Okay,
yeah.
So we have to talk about yen. Obviously,
yes.
it looks like they may have intervened just hours before this BOJ decision. So certainly that ramps up the speculation whether this meeting is going to be live or not. And then you got to talk about this sort of recovery that we're seeing across Korea as well, and also when it comes to China.
Yeah, I mean, we just talked about this during the break. Right? It's emerged that this intervention theme has
a little bit
emerged not just in Japan,
not just
right?
in FX markets,
not just in FX markets in Japan. Reuters reporting that Korea sold dollars yesterday, so you had the won strengthening there. You had this announcement coming through out of the government in Korea that they're partnering with a sovereign wealth fund, maybe to allow some investments to go into the domestic stock market, maybe some sort of intervention. We don't know. There's no direct correlation, but the timing's interesting.
And even with China, right? I mean, after that Politburo meeting, which largely was seen as a bit of a disappointment in terms of we didn't get any signs of meaningful stimulus, you are seeing signs that perhaps national teams stepping into these markets.
The turnover in some ETFs linked to some of parts of their basket did see a surge in turnover, specifically, and we'll get to the names in a moment here, specifically the names that track the Star 50 and the ChinaAMC index. So, yes, it is the name of the game. Whether or not it happened or not, prices are reacting as if they were in the markets today. A50 futures, I don't normally see that contract go up by that amount, so that is something to talk about today. Asia's now up by about 4%. Dollar yen coming up on your screens, a 5-day look. And that dip right now, and we were just alluding to this right now, some breaking news. This is out of the Wall Street Journal, that Tesla is considering, is weighing the sale of its China business to pave the way for a potential SpaceX merger. Okay, are you seeing anything else of this? Okay,
I'm just reading a little bit more on the journal reports. Yeah. So it says that Musk in recent years did instruct Tesla executives to organize the company with a laser between its U.S. and China business. And he wanted to ensure that in the event of geopolitical strife between the two countries, at least the U.S. half of Tesla would survive. So you got to wonder. I mean, it seems like you had to choose between the two in some ways. But yeah, given what's been happening in the domestic industry there and really the EV slowdown, maybe that's why they're focusing a little bit more back home.
As we speak, our producers are probably scrambling to come up with that list. We're looking at EVs and a lot of the car makers on the back of this news.
We need Danny Lee.
On speculation.
Danny Lee at work today.
If you guys are listening, wait for the call to drop in, if not already. Okay, so this is one breaking news story we'll get to. I'll get more details on in a moment. The other, of course, the backdrop of this is a market that is surging quite substantially as we speak. Dollar yen, we talked about this on your screen. So at one point, we did take out the 160 handle. We're calling back above that as we speak. Yen cross is coming up on your screens. It's not just the yen. Reuters reporting that Korea sold dollars in the markets yesterday on Thursday. CNH and the cross there against the Japanese currency also fell the most since 2022. Okay, if you're a bull, open your eyes and have a look at this. TAIEX index coming online. Kospi is up. And it's very weird for me to say this. Japan is up 5%. It's underperforming Korea by 10 points. There we go on your screens. NASDAQ futures up 1, and A50 futures coming up on your screens. Last we checked, up by about 2%. So we are all systems go. The tailwinds are being felt. The bulls are out as we count down to the open of trade here today.
All right, let's talk about one thing at a time, right? We'll talk about this equity rally in just a bit. Let's talk a bit more about the yen. Our chief Asia FX and rates correspondent, Ruth Carson, joins us from Singapore. And what happened here? It looks like they did intervene again. How are traders positioned on the yen into this BOJ meeting now?
It was definitely intervention Thursday for Asia currencies and yen, absolutely. Dollar yen in focus. So what are traders doing just hours away from the BOJ? I think the trading action speaks for itself. Now, remember, there was a more than 2-year rally in terms of the size of the move for dollar yen yesterday and how much it dropped. But think about it. We were shy of 158 yesterday when Japanese authorities were believed to have intervened in markets. And here we are above 160 again, just hours after intervention. How are traders looking at it? Perhaps as a head fake and a chance to buy dollar yen. And in fact, if we look at options markets, if we look at, strategists talking about it and all the IB chats, everyone's going, look, intervention is just a speed bump ultimately because rate differentials still matter and the BOJ is still seen and judged as behind the curve when it comes to raising interest rates.
Now, Scott, the timing is interesting in a sense that we did hear from the U.S. Treasury Secretary, of course, who needs to be on board for any intervention, describing the yen as very undervalued. I think he made those comments in an interview with Fox Business. Put those comments in context for us.
Yes, so on the surface level, if you talk to fund managers, fast money, or even strategists on the street, many will tell you that, yes, they agree. They agree with Bessent that the yen looks undervalued, it looks cheap, and a lot of fund managers will tell you they're looking for opportunities to buy the yen. But the reality is when you have rate differentials still weighing, when you still have a backdrop where, a weak yen is likely the outcome over a stronger one, and inflation being a problem in Japan and the BOJ being behind the curve, investors are still going to judge with their wallets. They're going to put money where, you're going to make money. And in this case, it's yen shorts. So absolutely, it does look cheap. A lot of the markets would agree with the US Treasury Secretary's views on this. But trading actions tells you a different story.
Ruth, we've got to talk about the won because we're getting some headlines here right now from South Korea's FX authorities. So they are also working with the U.S., with the Japanese here, and to continue close cooperation with those major countries. We're not too sure what, it's not saying too much, but there has been some reports that they did sell dollars as well. What are we looking at in terms of the won moving forward from here?
Yeah, absolutely. Another currency that is in the crosshairs when it comes to pressure, is particularly in the last year, absolutely. And with the Kospi, performing the way it has, as well as capital flows in and out when it comes to the AI boom. Look, they took the opportunity from reports that we've seen to actually sell dollars in the market overnight. Could we see more? Yes. Korea is definitely one of the more interventionist as well when it comes to propping up the currency when needed.
Ruth, thank you so much. Our chief Asia FX and rates correspondent there. That's really playing out across equity markets. Taiwan is opening up 7%. MSCI EM. That's the gauge, of course, for emerging market stocks, up the most since April. Kospi, Nikkei, and A50 futures are called higher, 2% to the upside. Anthony Stephens is here with us to tie the FX story into the equity markets and what's going on in Japan, Anthony.
Happy Friday, guys.
Certainly.
So we see the dispersion between momentum in Japan and the traditional exporters playing out in a really big way. Momentum is back. Momentum was back in the US. It's roaring back here after the Amazon results, after these kind of comments from Korea to support AI demand. So the AI trade is back in a really big way, especially since we saw some of these kind of struggling funds get stopped out overnight yesterday as well. So Japan, the space in the CIMIS is very strong. We're seeing double-digit gains across the board, carrying on from very strong earnings versus weakness in the likes of Nintendo, Sony, Toyota, traditional export names. And that's going to be very important to watch in terms of determining how far Japan is allowing its yen to strengthen, because they do need to keep an eye on those exports, because China is coming for those exports, Korea is coming for those exports, and that speaks to why Korea coordinated with Japan. They also don't want the won to be an unwitting victim of intervention in Japan, like the yuan strengthened. So watch for that kind of coordination element. But for now, the tech trade is ascendant, momentum is massive, and momentum likes to see these kind of double-digit gains to get conviction.
We certainly need that after what was like a 17% drop in Korea in just the last 3 sessions or so. But is it purely just dip buying, you think? Or do you think fundamentals, technicals, and all that is set up?
Well, they're coming together.
Rally now?
They're coming together quite nicely, right?
Yeah.
So yesterday you saw the first inkling of foreign buying into Korea, with the local retail selling and domestic institutions buying. We're seeing a repeat of that dynamic today in massive size on the open. Foreigners are continuing to buy the strength early. You can watch it live on the terminal. They're buying in quite big size on the open. In terms of the breakdown as well, there is no fear in that market. You're seeing Samsung, Hynix, LG, LG Electronics, everything high beta is ripping double figures. What remains to be seen is whether Korean retail are closer to the end than the beginning.
Yeah.
And on the fundamental side, Amazon was a great result for Korea. They are undeterred by capex concerns and are plowing ahead.
Okay, Anthony, thank you. Our Bloomberg Markets reporter, Anthony Stevens, just walking through all of the moves that you're seeing, right? And it seems like things are falling into place. And you take a look at what China is. We can't forget about what's going on in China, too, and the outperformance that we've seen, right? Oh, we're switching from Kospi all the way to, of course, China. But we are set for a potential another week of outperformance against U.S. equities in China. And that's despite what we heard from the Politburo as well, right? I think expectations were already quite low for any sort of major stimulus. So there was a bit of disappointment on that front there in the equity market, but certainly also looking at signs of national teams stepping in and the like. But Dave, what else are you watching out for?
Yeah, well, the statistic is correct up until, and I would imagine there's a chance that might not hold today. And I'll talk about it in a moment. So as things stand, I'll talk about this in a moment. We are up 5 weeks, MSCI China outperforming U.S. equities, but with this comeback of momentum we're seeing today, the U.S. has one more trading session left, and that could scupper that one, depending on how things trade in the U.S. on Friday. Of course, that is also to say, when you look at China, we're up 2%. We'll get to that in a moment. But yes, the market was largely underwhelmed when we did get information coming through out of the Politburo. This took place in the afternoon session yesterday as the cash markets were about to shut. In fact, the opposite when you look at a 10-year bond yield, which is going to come up on your screens very shortly, also seeing a big dip going into the close. And currently we're trading at about 171. We came from about 174, 173 earlier in the session. Now, speaking of some signs that the national team perhaps stepped into the afternoon session across some parts of the equity market, because some ETFs linked to that basket that they tend to buy when they do step into stabilized markets. ChinaAMC index just shows you, of course, a session yesterday. So you had 2 ETFs. One is linked to this. The other is linked to the Star 50. Don't pay attention to the price. It was really turnover that really picked up into the afternoon session. But again, just to end on that, so 5 straight weeks of outperformance. Currently, it could change, or we'll see. We'll see what happens with Hong Kong, because there are a couple of other things that have emerged very recently, like this journal story on Tesla looking to sell the China unit. So we're looking at EVs, for example, they're very, very closely, right? So the reason I'm hesitant there, because we're short of details on that, but that is going to be very consequential in trade today. But if 5 weeks, last time we saw 5 weeks was all the way back in early of 2025. Yvonne.
All right. We'll see how this all plays out, especially in the EV side of things here, given the competition they've been seeing with Chinese automakers. And certainly maybe that is one reason why. But it is also ahead of that big SpaceX deal when it comes to Tesla, according to Journal as well. So certainly a lot to unpack there. We're counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. As we talked about futures at this point in the morning, pretty punchy here right now in China. We're up as much as 2%. This is the China Show. Happy Friday. All right, what a rally that was underway here right now. Is it the start of some sort of recovery that we're seeing when it comes to, of course, what has been momentum? And really, the 16% gains in the Kospi certainly does, in some ways, erase a lot of the losses that we saw in just the last three sessions. So a lot of optimism around there. We talked about the FX intervention sort of kind of overlay that we're seeing across Asia FX, the yen with the won here this morning. And that's why you are seeing maybe perhaps a bit of stabilization as we enter into that BOJ meeting in just a few hours or so. We also need to unpack all the U.S. earnings, right?
Yes.
We saw what happened with Amazon, which gained. You saw Apple, which actually went the opposite direction. China sales and the disappointment there seemed to have led to a bit of disconcern on that part. But let's unpack everything with Maribel Lopez, founder and enterprise AI lead at Lopez Research. Maribel, it's great to have you. I'll start with the hyperscalers like Amazon, right? It seems like, when it came to AWS, it seemed like everything from there seemed quite robust. Are we seeing much more growth come through from these hyperscalers again?
In the U.S. market, everybody was holding their breath on Microsoft and Amazon's revenue, because if that didn't come in, there was going to be an extreme validation of the concept that maybe the AI boom was over, that we were spending too much money, that we had to hold off on capacity planning. The sell-through came in better than expected. The discussion about demand going forward became better than expected, which leads to really the semiconductor industry getting a boom and the whole global economy saying that there's still opportunity for AI sales as we move forward.
So, Maribel, part of, I guess, the second part to that question would be how much of the are they monetizing AI question that was answered so far?
I think we came in better than expected. We've heard the story for several quarters now about we're going to invest, and then we're going to see some enterprise buying demand. So when you look at the size of the cloud services that we were going into, to still see, 30s, almost 40% growth in a hyperscaler at this stage of the game was actually very encouraging, that the demand that they had been talking about was actually starting to be monetized with people running AI workloads in the cloud.
So how does what's the read-through there? Right? You mentioned that it could lift the chip sector, the picks and shovels trade, and really kind of bring momentum back into this market. Do you think that this is the beginning of some sort of relief rally now, or do you think we still might be dealing with some volatility ahead?
I think we were chasing ghosts before. We didn't really know if there was going to be any signs of growth and opportunity moving forward. I think that the earnings that we've seen thus far this quarter actually were fairly strong across the board for almost everyone. There were some issues, for example, you mentioned Apple in terms of some of what the disappointment was. I think there's been a discussion about companies, like how diversified are they? Do you have data center? Do you have smartphones? Do you have physical AI? Do you have software and services? And depending on the answer to that question, there's more or less enthusiasm around you as a company. But I think what we did see is for the infrastructure, for the picks and shovels companies that are selling to the hyperscalers, that are selling through to the enterprise buyers doing AI workloads, we finally saw some light in what we thought was going to be a fairly significant quarter to just be average. And average was definitely not going to be good enough.
No. Can I ask you about Meta? And I'm a bit hesitant to directly tie the market reaction to what the company said, because the stock has also done well. So it could be partly related, of course. I think I was checking a statistic today. Here we go. The stock is down 11 straight days, longest since it went public back in 2012. Did anything go wrong, in your view, with the Meta story?
So one of the things that investors are really struggling with right now with the Meta story is they're investing a lot of capital. Unlike hyperscalers, they're not really going to sell a lot of cloud computing services. So all of that has to be monetized with some form of AI services or advertising services. And the big unknown, and this is a very large, significant unknown, is when we will start to see the impact of the AI model providers, the new AI search providers, companies like Perplexity, companies like OpenAI, who have made stated opinions about how they want to be the next wave of commerce and helping with that next wave of advertising and commerce. How is that going to impact Meta? And we have trouble handicapping that one right now. So some of the disappointment with Meta is very strong investment and a very uncertain future revenue outlook for them in terms of who's going to be coming into their market and impacting their sales.
This week, there was a lot of concerns before these earnings, of course, Maribel, about circular financing once again. You know, what these hyperscalers, what NVIDIA, and how they're becoming big financial players in this whole AI infrastructure build-out. How concerned should we really be now about these big deals that are coming through?
Yeah, we are in this state where the revenue for the frontier model providers has not caught up with the spending that they had. The traditional capital markets would not do financing. So vendor financing is actually one of the best options that they have at this point, but it does lead into this. If NVIDIA says they're selling a lot of chips, but they're really vendor financing the chips to OpenAI, did they really make any money? So we do have a bit of a circular economy going on at this point in time, but it's not surprising. I think what we're all trying to figure out is this will be the most disruptive tech boom of our time. And the question is, how fast and how broad is the monetization of that? Because if you think about the companies that we've had in the past, we're looking at a whole different breed of companies being the companies of the future. You know, is it OpenAI? Is it Anthropic? Will we continue to see someone like Microsoft, who's been around for a significant period of time, still be in that category of companies that's successful? So these are the questions that people are asking, and what people are trying to figure out when they're investing is, who will be the next company for the next 25, 30, 50 years?
And Maribel, just quickly, has the emergence of, I'll just use Kimi K3, but the emergence of these Chinese models, does that change that premise you just laid out there?
I think there's been a tremendous discussion about how open source models, the global model environment will impact the commercial revenue opportunity for the traditional foundation model providers. So I think we're in a state of tremendous innovation, tremendous opportunity for disrupt across the globe. China's coming out to be quite a strong player in AI right now, and I think everybody's a bit concerned about what that will do to the US economy.
Maribel, thank you so much. Maribel Lopez there joining us, founder and enterprise AI lead at Lopez Research, joining us from Mount Pleasant, South Carolina. Today, we'll have more, of course, on the tech story coming through later on in the show. At about this time in the next hour, Silicon Motion CFO Jason Tsai will be joining us to talk us through the chip devices company's outlook following earnings, which were quite robust, and a massive pop in the share price. And as we go into the session today, we're checking EVs, among other things. We'll unpack a fuller preview of the trading day ahead on the back, for one, of the journal story that Tesla is mulling a China unit sale ahead of a potential deal on the back of the SpaceX conversation. Lots more ahead. This is Bloomberg. Okay, welcome back. We're looking at the approach to the open today. So it's more a tech story within Hong Kong, as you can see on your screens. Between Hong Kong and mainland China, it's more an onshore market. As you can see, ChinaAMC is now up, I believe, about 5 in the early goings. A50 futures are up 2%. We get PMI numbers coming through as well. And one stock I'm watching very closely, CXMT, amidst this comeback in memory and chips and AI plays across the region. We'll get to that and more at the open. This is Bloomberg. Looking at the news flow today going into the open, probably the first time I'll admit that our human brains do not have the bandwidth, lacking the compute, as they say. Just given everything, I can't wrap my head around. I don't know even where to start. I've spent 30 seconds talking gibberish now. You have the BOJ, you have intervention, you have this 2% rally. We're up 5-6% on some. We're up 7%. We're up 16% in Korea. So I'm circuit breaking as we go into today. I do lack the compute.
It is Friday. It's been a volatile week, and at least
true.
we're ending on a very, very positive note. If you've been buying this dip for long, these
so
markets
far.
are waiting for some sort of signs that we might have reached a floor in Korea, right? Yeah. So certainly there's a lot of elements here. You got to have to maybe thank the hyperscalers there and what they reported overnight here when it comes to Amazon, the cloud, outlook there, and certainly that may have helped at least lift up the chips and the picks and shovels trade. That's why you're seeing that outperformance in Korea here today. You add that to the FX overlay of intervention of the yen, of the won potentially as well, and those two could actually be also enough to inject a little bit more, I guess, confidence across these markets. We also have a BOJ meeting, right? Look at the Chinex. We're up 5.5% here right now, 10% gains nearly for Capricorn Techs. The chips continue to outperform here today, and you are seeing, as we mentioned here, momentum coming back in a big way when it comes to this AI trade. So what used to work, right? Chips looks like a little bit more, I guess, upbeat here after what we heard from the U.S. side of things here as well. Korea also announcing about they're adding a lot of investment into the whole AI trade too through the sovereign wealth KIC, fund as well. So a lot more of that focus there. Zhongzhi Inolite, the A shares, there you go. We're up 12% here. This, of course, they just listed in Hong Kong this week. This is, of course, the optical transceiver maker, and so certainly there's that. And then we have PMI numbers. Gosh, I almost forgot.
I forgot about that until it dropped on my. So it's actually quite a
miss.
Quite a miss here. So we're looking at this is the service. So non-manufacturing coming in at 49. Ooh. That's a full point below the estimates, which was just about in line on the 50 threshold. The manufacturing gauge also coming in way lower than expected at 49.2, where the estimates were for almost a full point higher. Again, this is a diffusion, it's a survey, it's a point, but suffice to say it's missed, and it's also signaling contraction as far as that is, which I guess underscores some of the concerns markets had yesterday following the readout of the Politburo meeting.
Yeah, I mean, you take a look at what it was, right? I mean, I think expectation leading up to this wasn't even that big. Right? And still, as our PE's Cheng Shu said, they were also disappointed despite not expecting too much, right? So they didn't.
And they're not hard to please, actually.
And just talking a little bit more about that, right, is that they still think that they could reach a growth target this year, according to Bloomberg Economics. But then again, they said more downside risk could be possible here. Maybe what we've been seeing in the second quarter and the third quarter is starting to show that in some ways. So certainly that's one thing to watch out for. We're also watching out for CXMT shares, right? They are flying once again this morning. And what a week it has been since it debuted, right? We're talking about 11% gains now. That's really been fueled by the likes of what we've been seeing across Korea, across the SOX index overnight. So there you go, 12% gains of CXMT here right now. Hong Kong is doing this. Today it seems like a lot of the focus has been tilted back into onshore. Hong Kong is actually 0.5% lower. MSCI China is also at around that 75 level here. So we're watching very closely what goes on. The offshore renminbi, it's interesting, we're at 675 handles here right now. So after that, reports or suspected yen intervention, the offshore renminbi did gain as well. Perhaps that's why we saw a weaker fix on the PBOC here today. But we're watching, of course, mega big tech. Pretty mixed picture across the board. Meituan, Xiaomi, Tencent are lower, but Baidu and Alibaba are up. So not really telling us a clear picture here. But Xiaomi talking about these new SUVs as well. Apple sales. Well, China, in some ways, did disappoint, but you are seeing when it comes to the Apple supply chain actually doing quite well here today. Perhaps they're more focusing on other things, right? Not just the Apple story here. And so we're watching data center stocks. We're watching China chip stocks. Seems to be the outperformer here today. So once again, we're watching the likes of not just CXMT, SMIC, double-digit gains for Hua Hong Semi as well.
What's going on there?
Zhongzhi Inolite, 8 shares are also up double digits as well. China Autos. Okay, this was also the big news in the last couple of minutes, right? So the Journal reporting that the company might be considering a unit sale of its China business ahead of that potential SpaceX deal. We have more of that with our China correspondent, Min Lona, on what we know at this point from this report from the Journal.
Yeah, this is certainly really huge news because Tesla is potentially looking to sell or even close down that entire China business in anticipation of any geopolitical headwinds and in the event that it's no longer tenable for them to continue to maintain operations across both U.S. and China. The company wants to protect the U.S. business. So they're looking at potentially selling off the Chinese business, and a part of it is also driven by how Elon Musk has been talking about crossover opportunities between Tesla and SpaceX, right? So he's according to the journal, also preparing for potentially a merger of the two companies. And imagine if SpaceX has control of Tesla, and SpaceX is a major U.S. defense contractor, this will run into major regulatory issues in China. If SpaceX has control of these Chinese factories, they have the know-how and they have access to the supply chain knowledge, there could potentially be issues of leakage when it comes to even dual-use goods, when it comes to critical minerals, or even access to the millions of Chinese Tesla drivers as well. And all of these data falling into U.S. Defense Department's hands, that is something that China will likely be opposed to. So that's why Tesla is looking at potentially ring-fencing this China business. Potentially another option is to put some sort of wall to prevent employees in China from accessing other parts of the Tesla business. For now, the China head, Tom Zhu, he is in charge of global automotive business for Tesla. But the other sort of reason that Elon Musk has to consider as well, he's also concerned about over-dependence on China when it comes to certain supplies like battery cells, like access to TSMC's chips, which, according to the journal, there is concern that these would be under threat in the event of a China attack on Taiwan. And the company is preparing for that eventuality. By 2027, they kind of want to ensure that U.S. factories would be weaned off Chinese suppliers. So all of this really something that could be a big game changer for the Chinese EV business.
Yeah, Yvonne just talked about this, this group of stocks. So obviously the chip story. Can we get that up, guys, so our viewers can see that? There's this massive rally in the AI space in China.
Yeah.
And data centers specifically, right, as we were just pointing to earlier on. What's this, our understanding that DeepSeek is planning this really big data center in Inner Mongolia. What do we know? How big is it, and when is it going to be?
Yes, this is a Bloomberg scoop by one of our colleagues, and DeepSeek is reportedly looking to invest in a 1 gigawatt data center in Inner Mongolia. That's a province in China, northwest of Beijing. And 1 gigawatt is by far larger than anything that is operational in China so far. But it's still smaller in scale compared to what U.S. hyperscalers are investing in. We're talking about 3 or 5 gigawatt factories. But this is certainly a very ambitious sort of project by DeepSeek. It's not clear whether DeepSeek plans to fill it with domestically made chips or a hybrid of NVIDIA chips and local chips. But of course, the U.S. has already accused DeepSeek of illegally accessing NVIDIA's Blackwell chips in Inner Mongolia through smuggled sources. But yes, this is also something that represents a big infrastructure build-out, and it shows you how Chinese firms have been able to secure the funding for such massive investments, right? Because Jensen Huang has estimated a gigawatt data center could cost $50 billion. But of course, that cost could vary in China if, depending on the location, depending on the chips used, it could be much smaller for DeepSeek to invest in this data center in Inner Mongolia.
All right, Min, thank you so much for wrapping up the big stories for us there. Let's pivot now away from AI and equity markets into the fixed income space. And I think, sort of our segue there would be this move we saw in the CGB market yesterday, post-Politburo readout, and the drop we're seeing in yields and 1.7% in the onshore CGB market. Dollar China on your screen, 7 offshore there, 6.75 there is the exchange rate. Joining us here on set to talk us through fixed income strategy is Serene Tsai, Executive Director and Portfolio Manager at ChinaAMC Hong Kong. Happy Friday. Good morning.
Yeah, morning.
So what's a strategy that's worked so far within your mandate, and why do you think that is, and does that continue?
Yeah, actually, since last year, we have seen the heightened market volatilities in the global fixed income markets.
That's right.
So actually, as a fixed income portfolio managers, we're looking at something that with the lower correlation with the global macro volatilities. So we found that the offshore niche assets actually are not just like the historically like the simply betting on the China macros, but gradually it becomes an independent asset classes. That value for is lower beta as the low correlation with the no matter global fixed income or the U.S. Treasuries, and also it's improving liquidity and welcoming more market participants in these markets. So actually, we have seen the especially RMB assets and especially the offshore dim sum bonds actually generate quite a compelling returns in the total return profiles in our portfolio.
There was a bit of disappointment about the lack of or announcement of some sort of stimulus.
On the macro side, yeah.
What assumptions are you making on the policy front now, too?
Yeah, actually, following yesterday's meeting, I think we didn't see any significant policy surprises. But I think with the current environment and the contingent the rates volatile, it still makes investors comfortable in the RMB onshore or offshore bond markets.
Well, you mentioned low beta, and I think for a while now, in fact, since the COVID reopening, yields in China have been just slowly grinding lower. I think to your point, they've been just uncorrelated to almost anything out there. I wonder if you could share some numbers. How uncorrelated is this asset class, whether that's onshore or most of the stuff that you covered here in the dim sum bond market?
Actually, if we're looking at the correlation between CGBs and U.S. Treasuries, actually it's remained at very low point, about 0.1 or 0.2 historically.
Okay.
Yeah.
And how about the offshore bond space, like dim sum bonds, for example? What's the attraction there?
I think the offshore dim sum bonds, actually, it's the investment logic is shifting from just FX bet now to a more comprehensive fixed income investment logic based on the rates and credit profiles and also the policy backing. So I think if we're looking at the volatilities where the max drawdown of the offshore CNH bond index, especially the Bloomberg dim sum bonds or CNH bond index, the max drawdown over the past 5 years is within 1%. Well, if we compare to the global aggregate fixed income index globally, the max drawdown probably went to 5 to 8%.
Tell us a bit more about just the demand base and who's really investing or looking into this space right now. I mean, we just had, I think recently, they made this announcement in Hong Kong of Paul Chan lifting the quota here.
Yes.
When it comes to some of these, the
market
southbound
access, right?
bond connect quotas. What does that tell you about maybe this market maturing a little bit? Maybe is the investor base widening a little bit? How much interest are you getting now?
Yeah, so I think with the help of the policy expansion, no matter on the annual quota or the product range of the southbound bond connect region, so we have seen gradually structured incremental demand on offshore dim sum bond markets. So especially since last September, after the expansion to the non-banks institutionals onshore, that the fund managements, the bank wealth management, even this year we have started to see the onshore insurance companies to tap into the dim sum bond markets. So we have seen continually steady inflows into the dim sum bond markets from onshore, and also with the we have seen a lot of the foreign insurers tap into the dim sum markets to refinance their U.S. dollar bonds, were just the junior RMB funding needs. So with the diversify in the product base, we actually seen a lot of the foreign investors finally tap into the market since the last year.
Well, I was going to ask you what the outlook is for supply offshore. So I think that's one part of the question. The other part is, what does that look like? Because onshore rates are so much lower, and there seems to be obviously a tendency to raise money onshore just because it's cheaper.
Yeah, I think so if we're talking about the supply in the offshore markets, it's not only just looking at the rates. So I think in terms of the China issuers, so if we compare the Chinese CGB rates compared to the U.S. Treasury rates, it's still at the lower range. So with about 1/3 of the Chinese U.S. dollar bonds gonna mature in the next 2 years. So for these Chinese issuers, we expect them to refinance their U.S. dollar bonds by issuing the offshore CNH bonds. So yeah. So and also we have seen a lot of the foreign issuers tapping in the CNH markets, no matter the sovereigns or the conglomerators, the large corporates, they issue the CNH bonds to diversify the markets.
Where does that leave the renminbi in this whole internationalization process? I mean, are we just early innings? Where in that process are we now?
I think we are gradually in the more mature progress in the RMB international. So previously, I think the RMB is more like the trade settlement function, but now we see it's more like the investment, financing, and reserve functions.
Serene. Thank you so much.
Thank you.
That was great. Happy Friday. Have a good weekend ahead. Serene Tsai there, Executive Director and Portfolio Manager at ChinaAMC in Hong Kong. Right, coming up, a tale as old as time. Citadel swoops in as hedge fund Situational Awareness takes a hit from the recent AI rout. Details about Ken and Leopold coming up next. This is Bloomberg.
Now, one story that I think is probably one of the most well-read, even in this news flow here today, is the situation around situational awareness, right? Assets at the hedge fund has slumped to about $10 billion after Citadel stepped in to buy the bulk of its public stock bets. Now, a source says that's down by more than half from recent months.
It is the top. I just checked. It is the top read story in the Bloomberg terminal in the last day, in the last 8 hours or so. So you have the hedge fund, of course, started by AI researcher Leopold Ashkenbrenner, has been hit hard by the recent rout that we've seen, perhaps up until now, in tech stocks. So let's dig into the story and what's really gripping global markets. We're joined by David Ramley right now, who just to take us through this dramatic few days into the current situation we're in. And, you know, David, how quickly things went wrong? What happened?
Well, basically, they were a little bit too concentrated when it comes to AI and when it comes to shorting software. They took a lot of leverage from a lot of banks and prime brokers in order to fund this. And when the market went tactically wrong, when AI stocks went down and when software stocks rallied, they got margin called. And at the end of the day, they needed a bailout, essentially, in order to fund those bets.
Yeah, in comes Ken Griffin, right? I'm just wondering, it seems like because of what Citadel did, they were able to at least dodge this bullet of being this kind of massive leverage blowout. But it does show a little bit of where and the risks and rewards of being in this very concentrated AI trade. In terms of situation awareness, what do we know what's next for the firm? I believe he still has a pretty big stake in Anthropic and some of his private stakes in companies too.
Yeah, its sort of investor profile looks very different to what it looked like about 7 days ago, right? I mean, previously we had a company with a lot of public positions. Now it seems like what has kept them towards that $10 billion AUM figure is more of their private stakes. And the hope that those companies, as they IPO, as they publicly list, or as they get traded, can increase in value over time. If not for that, then this would have been a story much more similar to, say, Archegos, where massive leverage bets actually melted the company down. So this time, very much a bullet dodged, and also a sign that the market remains somewhat bullish when it comes to AI stocks. You need someone like Ken to swoop in and think, actually, I can find value here and buy it. Otherwise, you're completely screwed.
Yeah, well, is there a lesson here to be? I think we ask that question every time we get a blow up like this. At least this one was close to a blow up. You mentioned Archegos there. What's the lesson here, David?
I think there are a couple of key lessons. The first is that a lot of folks in finance can look down on hedge funds and say, look, these returns aren't fantastic. Sometimes it's trailing the markets, et cetera, et cetera. Hedge funds have gotten to where they are today, many of them, especially the multi-strats, because they know how to take risk and they understand the nature of risk, right? It's not just that the stocks move up and down, it's also about your leverage. So I think the most important lesson here is that even if you are directionally right, you can be tactically wrong, and you need to be prepared for the downside in case of this. AI is a very, very volatile sector. Market sentiment is very volatile. So on any given day, you might see huge ups and downs. Hynix, as a great example in the last few months, skyrocketing and then slumping badly. So if you made the wrong bets at the wrong time, you lost a lot of money. But the second key lesson, I think, here is for the banks themselves. For example, people familiar, according to our reporting, say that Barclays was approached to give leverage, much like a lot of the other banks. And their prime brokerage team in the end said, actually, you're so concentrated when it comes to tech and AI, you're not in our risk profile. That's a huge bullet dodged. Otherwise, Barclays would be all up in the headlines right now with a lot of exposure.
Very interesting. David, thank you. David Ramley there. But yeah, it's interesting. I was just researching all morning of who Leopold is. He's pretty young and hasn't really have any really experience in investing per se, but he was seen as almost like this AI oracle, right? He wrote this big essay back in 2024 about how AI is basically going to disrupt society, right? And really kind of maybe inflame geopolitical tensions in some ways. So people were really scouring into even just the regulatory filings of really what the next AI trade was for him and his firm.
Yeah.
But certainly it's quite interesting just how things have collapsed really in the last 24 hours.
Well, where perhaps the investing experience would have come in, being able to just foresee parts of how it's collapsed, right? But I think it's indicative of this broader trend of, not a lot of people understand AI to the level that if you're an insider, you compare that to it's apples to oranges, right? And it's understandable why people are turning to the people at the very frontier of the technology to figure out what the next thing is, right? Because we're trying to figure it out. The guys in finance and try to figure it out. I think in the same way when quant funds came up, it was the math guys that came in more than the investors, right? I think we talked about this too, right?
Yeah.
It's very similar to, although perhaps the opposite, DeepSeek is a hedge fund and an AI, and I think this is fairly similar to that.
I think for Leopold, it was instead of developing his own model and the like. I mean, they basically said, "I'm going to go big and bet on AI infrastructure," versus just the model developers itself. But yes, amidst this stock rout that we've seen the last few weeks or so, certainly they got caught in this. But yes, we'll have much more on this story coming up. And also, we're talking about more earnings as well. Silicon Motion's CFO Jason Tsai joins us as the company's blockbuster guidance signals growing demand for NAND flash controllers. We have more from Jason next. This is Bloomberg.
Right, welcome back. Rally we're seeing across the tech space, the new tech, and as you can see, I think at least for now, with the price move we're seeing today, CXMT is now currently China's most valuable company, biggest by market cap. It has now surpassed Tencent, with lots more on the way in the next hour of the China Show.
Welcome back to the China Show. It's been a busy morning and a busy week, but we're ending things on a pretty positive note here, with the exception of Hang Seng and what's going on in Hong Kong, because onshore markets have certainly seen a really decent rebound here, like the rest of Asia. Take a look at what the Kospi is doing. And really, the chip sector is on fire once again. Momentum is back. And yeah, in some ways, Hong Kong is losing out.
Yeah, which Hong Kong tends to do well when others aren't, which is perhaps why we are still, up until this point, and that could change, right, because of what's happening today, still on track to outperform U.S. equities. The other thing I want to bring up, too, and there we go, thank you so much, is something we brought up a few weeks ago, that the Chinex index is now a lot more correlated to the Philly Semiconductor Index. And as you can see, it's moving alongside the same lines as others in the region. Korea is still up. I can't make this up.
It's nuts. Because you're seeing what's going on with SK Hynix, what's going on with Samsung. Certainly, when you take a look at some of the U.S. hyperscalers and the earnings that came out from Amazon, I think you're seeing the amount of growth there, I think, was enough to validate investors to buy in on the chip space once again, and maybe buy on these potential dips. So it could be more than just to buy the dip story, as some say. Maybe there is a bit more fundamentals coming back into this market, and maybe there is that opportunity and that runway there for maybe something more sustained in terms of a rally. But certainly, there's a lot at hand. Foreigners also, right? We're seeing foreign investors buying Korea. That story back again. I think 4.8 billion was the number that we've been tracking again. I'm looking. Yeah, there you go. On the Kospi here in terms of the amount of stocks they have bought here today. So certainly there is a lot of momentum coming back. A lot of action back in the chip space. Let's look at the rest of the region beyond just what the Korea story is telling us here, because you're seeing that in China as well. Like so Capricorn Tech, SMIC, Hua Hong, we're doing very well. 30 minutes into trade, this is what we're seeing here right now. There you go. A lot of green on the screen, Dave. Yeah, almost everywhere you look, including, of course, onshore markets like SMIC and CXMT, which just debuted right now, which, as we speak, is now the biggest, most valuable Chinese company by market cap. It has surpassed Tencent.
in the last few minutes or so. The FX markets perhaps also to thank for what's going on in the equity markets with, we understand, by most accounts, seems to be intervention on the Japanese side, based on some reports, also some dollar selling out of the Koreans, which is perhaps helping the case for Korean equities. And of course, it's hard to ignore the timing of the Korean government KIC announcement about expanding the mandate of the Sovereign Wealth Fund to include a domestic mandate, perhaps there to invest within that market, right? Now, is that, was that to salvage the equity market? It's hard to draw a direct line between the two, but it happened at the same time markets were collapsing.
And keep in mind with the yen, right? It strengthened some three. We've gone from 163 to 160 in just the last couple of hours here. That's the biggest move we've seen in more than 2 years. Dates back to December 2023 day. That was a day when Ueda indicated that the BOJ was prepared to exit negative interest rates, right? And it's quite timely because the suspected intervention is happening before this BOJ meeting, largely expected. All the economists that we have surveyed don't expect anything to happen. But all of a sudden, this meeting is live because in previous interventions before,
they hiked, right?
They've hiked.
Yes.
And they've talked about surprising markets.
Well, no better way to do that when economists don't expect you to do anything.
Yes.
Right?
Yes.
So imagine getting on the plane thinking I should have changed my money, and then landing in Japan and suddenly the exchange rate is doing this. Always don't procrastinate. Do it if you're happy with the
Are you talking to me?
price.
Yes, I'm supposed to go to Japan next week. So
Yeah.
I missed the window.
Yeah.
Who knows?
Yeah.
Who knows where we'll be next week though? Right after this BOJ meeting.
Looking at past, it's going to grind back to 163.
I don't know. We can't call it, right?
Yeah. Well,
maybe David Savage can.
Yes. Let's bring him in out of our MLive team right now. We were going to talk about the yen later on, but yeah, why do we start with the Japanese yen?
Start with the well, it's headed in your direction right now today. I think we've seen already it's up over 160 again. Yeah. And I think that just points to the idea that the markets, these types of interventions can lead to very sharp tactical swings. But it's got to be followed up with some follow through on the monetary policy side, or we're going to keep seeing it kind of grind higher. And so I think that the stakes are pretty high for Governor Ueda today. Again, the expectations aren't that there's going to be a hike, but I think you're going to need to see some strong messages as it pertains to the yen that they're not going to tolerate yen weakness. They're going to be serious about that and maybe start talking about potentially 2 hikes this year rather than just one where the markets are trending.
Okay, so at least things are stable in the FX side of things here. What's the equity story telling you right now, given just the massive sort of price action that we're seeing in Korea once again?
Yeah, it's a fitting end to the month of July. It's been a very grueling month, and then, of course, we've had a big pop here at the end. But month to date, Kospi is still off about 24%. So I think on the plus side, I think the idea that we have foreign investors coming back in, that speaks a little bit more to the idea that you might have a more sustainable rally, building here if they're willing to step back in. Because I think for a long time we've seen the idea that the volatility is just too high, and when you've got essentially the market crashing, you're not going to necessarily have institutional investors stepping back in when volatility is at 90 plus. And again, the fundamentals are still very strong. I think as long as we've gotten through earnings season with U.S. hyperscalers thus far, very much saying the capex boom is intact. So if that's the case, all the infrastructure plays throughout Asia should benefit, and we're seeing that today. It's not just Korea. If you look at Japan, semiconductor-related stocks there, all those suppliers are really benefiting.
Massively. Massively. I mean, have a look at these moves. David, fantastic. Thank you so much. David Savage there out of our MLive team. Let's get more on the Japanese currency and the intervention there ahead of the rate decision coming through. Could come, in fact, any time this hour. Now, earlier on, we heard from the U.S. Treasury Secretary Scott Bessent speaking with Fox Business on the Japanese currency.
Japanese yen seems very undervalued to me. The currency is very cheap. The economy is doing well. The prime minister is very popular and enacting very strong policies. And I think we're going to see the fundamentals come through and at a point that the market will realize the yen is undervalued and should strengthen.
Yep, someone perhaps who is slightly happier now that the currency is slightly stronger is someone who earns her keep in the Japanese currency. Sherry An is in Tokyo for us, our good friend, of course. Sherry, no change expected from the BOJ today.
First of all, you read my mind because I did exchange some yen last night, and I was just looking to see if it would break 160. It did. We saw the spike in the yen of 3.3%, which is the most in over 2 years, right? And that happened around last night, 11 p.m. or so. And then we heard from sources that, yes, officially Japan intervened, but also the U.S. carried out rate checks at around 2:30 in the morning hours. But you said it, David, I mean, we're not expecting any change, so I wasn't that excited about this meeting. 52 economists surveyed by Bloomberg all expect a hold. But the fact that you had this move by Japanese authorities, is this signaling something? T.S. Lombard also saying that, you know, every intervention that we've seen a lot of the times have been followed by BOJ rate hikes, especially what happened during mid-2024. So things are getting exciting now. And the fact that you have Secretary Bessent, as you played out right there, just signaling this coordination with Japan, perhaps trying to deter those speculators from coming in and shorting the yen is key here. But we'll be watching what happens. Even if they hike rates, that would be a big surprise. I mean, nobody expected it. It was more exciting because of the intervention and the activities by the government, but not necessarily meaning that they will act. Half of the economists surveyed by Bloomberg still expect a hike in December.
Yeah, it makes this BOJ meeting just a little bit more interesting, I feel, yeah. Sherry. What are we watching out for the presser today? Obviously, Governor Ueda coming back after he wasn't in the last meeting because he was going through surgery. I mean, how high are the stakes for the governor today?
What he says and how he conveys it is key, right? Always the thing with the BOJ communication is that it could just move the Japanese yen in either direction. A commentary that's perceived as dovish could weaken the yen, could hurt the Japanese currency. We'll be watching, as you mentioned, given that Governor Ueda was away from the previous meeting in June when they actually hiked rates by 25 basis points to 1%, which is the highest level since 1995. We had one dissent back then out of 8 voting members. This time around, we'll be watching how many number of dissents we get, if any. Could we get 2 dissents? Usually we've had voting members like Takata Tamura, for example, wanting to hike rates, but at the same time, we had last time the dissent was for somebody who wanted to not hike rates, which was Asada, who was appointed by Prime Minister Takaichi. So we'll be watching for that commentary, especially given that the stakes are high for the Japanese yen, already at that 40-year level against the U.S. dollar, the weakness against the U.S. dollar, and of course, what it means when it comes to JGB volatility as well, because we have seen those 10-year yields now at the multi-decade highs as we continue to hear from the Prime Minister about her plans in order to cut the sales tax on food and also soft drinks, what that means for fiscal risk.
Ed, Sherry, you alluded to this somewhat. Politics is not immune. There is some indirect link between monetary policy and politics. Really adding another layer of uncertainty. Just take us through what's happened recently there.
Especially when you have fiscal policy just going in the opposite direction of where the central bank wants to go when it comes to its tightening path, right? We're talking about more fiscal spending potentially here in Japan. But the Prime Minister, at least officially, has now confirmed that she will be cutting the sales tax on food and soft drinks to 1% from 8% temporarily for 2 years, starting in April of next year. Now, that could be expansionary, right? And that is expected to hopefully help the economy and households that have been reeling from a cheap Japanese yen. Import prices have become more expensive. Core inflation has accelerated again in the month of June for the first time in 3 months. So we've had inflation at levels that households are not happy about it. We have seen the opinion polls of Prime Minister Takaichi just slump about 12 percentage points from June to July, according to a Yomiuri poll. So we'll be watching for more developments on that front and what it means for fiscal risks in the country, because that's been priced into the JGB space, where there's still a lot of downside pressure there at a time when we're also factoring in potentially higher inflation expectations because of oil in a country that heavily depends on Middle Eastern crude.
All right, Sherry, thank you. Sherry An there, our co-anchor at the Asia Trade, of course, joining us on what to expect there, given, of course, the suspected yen intervention. We got plenty more to come. This is Bloomberg. All right, we're watching this company, of course, Silicon Motion surge more than 20% on the NASDAQ overnight after the Taiwanese company gave third quarter revenue guidance that smashed consensus expectations by 23%. Revenue growth also accelerated by 127% from a year ago in the second quarter. And it is shifting from being a consumer-focused NAND flash controller maker into controllers and storage equipment from, no surprise, AI infrastructure to edge computing. Joining us exclusively now is the company CFO, Jason Tsai. Jason, it's great to have you back on earnings and post-earnings. Certainly, as what the market was liking here was the guidance for the third quarter. And, of course, these blowout earnings from your side of things in the second. What does it tell you about where you can still gain market share and really how sustainable this momentum is now?
Yeah, thanks for having me on the show again. I really appreciate it. Look, I think if you take a look at our core business over the course of the last many years, we've been very consumer-centric, PCs and smartphones. And obviously, we've seen all the data points around the weakness in these markets driven by high cost of memory and storage. We've been gaining a lot of share here. We've been laying the foundation for a lot of share gain with the flash makers, with the module makers. And so we've far exceeded any, the end market results because of this share gain, because we're upgrading to higher end products. And so that business, the core business, continues to execute extremely well in a difficult environment. I think what investors have really liked is diversifying our business. Our automotive Fair Solutions have done extremely well. That's scaling incredibly well. Our enterprise boot drive business is scaling incredibly well, and that's becoming a bigger and bigger portion of our business. And then, our enterprise controller business is, it was zero a year ago. And, exiting this year, we expect that to be 5 to 10% of our business. And that's started to scale in the second quarter. So we're really seeing a really nice diversification of our business playing out. We're confident that we can grow our business in excess of 100% this year. So from, 800 plus million last year to, 100% of that. There's more than 100% of that this year. Gross margins are improving. Operating leverage is coming in along with it. So overall, driven by strength in the core business, expanding opportunities, improving profitability, and responsible expense management. I think we're really excited by not just what the rest of this year holds, but certainly going into 27 and 28.
I mean, things look fantastic on all fronts, and I think the fact that you outperformed your guidance. I think my first question there then would be, you've given guidance out. How visible is it? I mean, it's great to have a number out there, but I just want to get a sense really of underlying demand where it seems companies are giving out guidance and just outperforming what they give out.
For us, there was a lot of things that happened intra-quarter, right? Demand spikes more than expected. Our customers are seeing better sell-through. Our customers are upgrading the components that they were ordering. All of these things are happening intra-quarter. We've got inventory that can support that type of dynamic movement. But, as some of these new businesses scale, new customers scale, sometimes early on, they're not necessarily as confident on kind of the scale of that ramp. And as that ramp happens, they become more confident on what demand looks like, and they upsize the orders. And so, yes, I think, we always try to give a balanced view on what guidance is, a realistic view on kind of what we think we can do. But certainly, the hope is that, the customers are seeing better demand. And I think we're certainly seeing that through the share gains and through the advancements into new markets, new businesses, and new customers. One of the things that we really are proud of is a lot of these new businesses, the visibility and the durability is great. These are products, our solutions are going into products that are, in cars and base stations and data centers that are, part of devices that are tens of thousands, hundreds of thousands, millions of dollars. And so, that type of visibility, that type of design win has better visibility. It has higher barriers to entry, gives us longer term understanding as to kind of how we need to source, what we need to source, what inventory we need to have. So it really helps drive that long-term visibility for us and gives us confidence on, not just second quarter, third quarter doing well, but next 2 years, 3 years doing well.
Again, don't get me wrong, that's a fantastic problem to have. What are your conversations like now with your suppliers? I just want to understand how you're managing your future capacity as most demand comes online.
Yeah. I think it's well known that TSMC and a lot of the substrate folks are tight on capacity. Substrate availability is tight. We're fortunate that we're one of the top customers of TSMC, and they've been a great partner of ours. We've been a great partner of them for 20 plus years. So, they've always been very helpful for us in being able to expand our capacity, expand our allocation, expand our wafer availability in real time. And so working with them closely to ensure that we've got a good understanding as to kind of what the base case looks like versus kind of what upside looks like, and having that ability to flex with them. Substrates, as you guys all know, has been tight. Our customers have been willing to work with us to find alternative substrates that help ease some of those supply constraints. We've got, a tier, just best-in-class operations team that have been on this since the very early days, and so have been ahead of making sure that as substrate availability becomes tighter and tighter, we've got alternatives that we can scale with our customers. So we're confident that even as the business more than doubles this year, we've got the capacity to support that.
You talked about these ramp ups that you had, obviously with NVIDIA. I think you have one coming up with Google as well. Can you tell us a bit more about? It seems like you're seeing a lot of growth on that front here. Should I be worried about concentration risk if in any event that we start to see volumes start to fade a little bit, or that this ramp up is actually going to be delayed in any way?
Yeah, so a lot of these programs that you're referring to, coming in later this year, going into 27, driving growth 27 and 28 as well. But these are, certainly some examples that folks have talked about. But behind the scenes, it's a much broader range of customers and markets, solutions that we're supporting, right? We've got a telco company for one of the largest telco equipment companies out there using our boot drives for their base stations. That'll start scaling in the back half of the year. We've got virtually every automaker around the world, whether it's traditional internal combustion engine, whether it's battery electric, whether it's autonomous, what have you, right? We have virtually every automaker using our solutions as well. So, point being is that a lot of this growing business is scaling across a very broad range of customers. Certainly, people like to talk about the largest GPU company or the largest search company, and those are big names to be associated with, and we're certainly very proud of the wins we have there. But if you just kind of double click a little bit beyond that, the breadth and scale of other customers is pretty fantastic as well. So it's a really diversified business, diversified end markets, a diversified customer base that we have, and so we're not concerned that there's going to be an outsized contribution from one customer or one product or one vertical that's going to have issues down the road. And that's, for our business, having this diversification helps us kind of work through the cyclicality of certain end markets in any given period, right? Having that wide range of end markets helps smooth that out.
Yeah, and certainly, as you say, you're shifting beyond just the consumer-driven side of things, but I guess it is still a headwind for Silicon Motion is, of course, the potential slowdown, what we're seeing in the PC market, smartphone market. I think during the analyst call, you guys were asked about the China outlook there. What is the demand picture looking like to you on that front here, and what do you think is going to be the outlook moving forward?
Yeah, we're certainly seeing that, right? I think certainly especially on the low end in China, it's been an incredibly difficult market there. We don't really do a whole lot on the low end. We're more mainstream to premium side. And that's where a lot of the handset OEMs are focusing more of their attention. On a low end handset, the cost of memory, the cost of DRAM and NAND far exceeds kind of the affordability of that product. So where you're seeing the biggest hit in unit volume and demand is on the low end. Mainstream premium ones are still holding up a little bit better, and that's where we see most of our business. And certainly the share gains that we've talked about here is doing wonders. We're going to be, almost doubling our smartphone-related business this year, consumer and IoT-related business this year. Our client SSDs, again, similar dynamic. Low end is where you're seeing a lot more of the pressure. We're not so much at the low end. We're in the mainstream to higher end. First half this year, we've grown 40% year on year, and certainly that's in the face of a very challenging PC market. And so overall, I think the story that we've been talking about, the foundation that we've been building in share gains, has really continued to pay dividends. We're seeing flash makers being less interested in this space, more interested in outsourcing, more interested in working with us, and that's helping drive a lot of opportunities.
Jason, thank you for taking the time and spending it with us. Markets obviously done a very good job at reacting to what you just laid out there. Have a great weekend ahead. So CFO there at Silicon Motion joining us out of Taiwan today. Lots more ahead. This is Bloomberg.
All right, 11:29 a.m. in Tokyo. Japanese markets are going on break in a moment, but the BOJ is happening now, right? So we're going to see what happens in the next couple minutes, couple hours, who knows? But that press briefing is scheduled later on this afternoon. Ueda is supposed to speak. A lot to look ahead to. I mean, no one expects him to do anything, but you're starting to see the pricing of maybe the next hike could be getting sooner than you think, right? Consensus was December at first. I think now it's getting a little bit more in October. I think it's 40% of forecasting the BOJ will act in a month or so in October. So yes, pace your bets because also dollar yen's back at 160.
Yeah, I was about to say, like, it was the land of the rising exchange rate. It is the land of the rising equity market. Will it be the land of rising interest rates? For whatever reason, right? When you look at how the BOJ raises interest rates, it's always few and far between. But there's always a case to raise interest rates at any given meeting. We're looking at where inflation is. But I think that's certainly why it's going to be interesting to see, despite none of the economists thinking they're going to raise interest rates, that they might indicate something. And what was interesting to it, what was that statistic you brought up earlier? Whenever they intervened,
it might follow with a hike. They've done that before.
They've done it before, right?
Yes.
Whenever they intervene, it was a hike. But so it's the plot is set to thicken today. It could come out any moment now. Let's talk about that. Joining us now is Amy Patrick, head of income strategies at Pendal Group. Amy, good morning and very nice to see you. So among the many facets we can discuss around the BOJ, have they missed the window? Are they going to take the window of opportunity to raise now? What do we do with all this information?
I was just listening to you and Yvonne talk about how they have enough reason to hike, and maybe right now they do, but I think the window, the ripe window has long since passed when I think about the actions of the BOJ, and especially when I look under the hood of inflation in Japan as well. You know, there are definitely pockets of Asia that are, like Japan, heavily reliant on oil coming out of the Strait of Hormuz. And since the strait has been closed, in certain pockets of Asia, you've maybe seen second and third round effects of the oil shock passing through to the inflation data. In Japan, you don't see that. It tells me that there's no internal inflationary forces that are so strong that compels the BOJ to continue to hike. And I know that the market has this thing about, the 6-monthly cadence and will it be broken? Will they go sooner? But quite frankly, I think maybe they've already missed the best window.
Oh, all right. That's interesting, right? Like, why do you think that people are so obsessed with that 6-month cadence here, right? And should we just look at this more as just like normalization than anything? Yeah.
Yeah. And ultimately, we are just talking about normalization. I think when I think back to, was it August 2024, when the market had hardly anything priced for the BOJ, and then they did this tiny little hike, and then equity markets globally just lost the plot for a second. And I do think that there is constantly this fear, and it was circulating again last week when we thought that the Japanese pension funds were going to start buying a lot more Japanese assets. Is this money returning home to Japan? Is this the unwind of the carry trade? But if we're talking about Japan normalizing policy rates, we're not talking about Japanese rates going to 5% kind of levels. If it's a policy normalization, if it's done gradually and against the backdrop of appropriateness for where inflation is, I don't think that the world has to come to an end just because the Bank of Japan may or may not hike again.
Yeah, well, let's talk about the broader fixed income market and bond strategies, right? Because for many reasons, including the war, including inflation, perhaps a hawkish Fed, maybe a strange obsession over the 6-month cadence of the BOJ, bond markets have had a challenging period. What strategies have you seen work, and what do you think will continue to work?
So the easiest thing for any income strategy to rely on is investment-grade credit. And we're so lucky in Australia because Australian investment-grade credit has, amongst all of global credit, the strongest Sharpe ratios, the strongest risk-adjusted returns over a long period of time. And this is because Australia is the home of just little risk-taking. We like to be conservative. We don't like to reach too far out the curve. And so for my funds, credit has been the easiest thing to go to. I mean, certainly Australian equities have had a much harder time than global equities of late, and it's not just a tech story here for us in Australia. And then also because the RBA has been hawkish and actually acted on that hawkishness sooner than other global central banks. I think our bond markets have had a harder time as well. But now going forward, I think, even though Australia is a more conservative credit market, I do think that credit tides move together globally. And what I see going on in the US, and especially all this fear and anxiety around hyperscaler, CapEx, and the debt that they have to issue, the debt that they have already issued, how that debt has performed. I looked at the performance of SpaceX bonds recently, not that I bought them, but that it certainly tells you that credit markets in the US are expecting a completely different credit quality of these kinds of bonds compared to where they're currently rated.
That's interesting. And then I have to figure what happened this week with the Fed, and the amount of deflection that we saw from the governor, Kevin Warsh, in that press briefing really led to a lot of unanswered questions, right? What is going to be the reaction function of the Fed now? How did you look at that? And does it make the case for duration a bit harder now?
It certainly makes it tricky in the US. And then when you look at how duration behaved, and especially the difference between real yields and break-evens after that FOMC meeting and then the presser as well, the markets clearly think, well, if he's not going to do anything about it soon, then inflation is going to get more out of control. It's going to be stickier for longer, and therefore break-evens have to rise. So that was the market interpretation of it all. Now, the obsession with, what if they remove guidance? The Fed says that they're watching the market, but the market's actually watching the Fed. So who's following who? Historical evidence shows us that the Fed, more than other central banks that we follow, especially more than the RBA, for example, they don't actually like surprising markets. And more often than not, they have usually followed the markets. And why wouldn't you, in some ways, when you think about it? The Fed, yes, they have an army of economists, and it's a full-time job to do this. But, so are bond traders. Their full-time job is to anticipate the winds of economic change in the global economy, in their domestic economies, and judge how interest rates locally and along the curve should react to those changes in the fundamentals that they see. So if the Fed has always shown its behavior to be following what the market thinks of the data, both soft and hard, that's coming out in front of them, and Kevin Warsh has just told us, well, we're going to give you less guidance and the market will have to go back to looking at the data. Isn't this what we've always done? And isn't this what the Fed has always done? So I don't really think anything has really changed.
Yeah, well, the old school is the new cool, right? Let's go back to the simplicity of the world. So here's a simple question for you. Let me end on this. There's been a widening in credit spreads. People are, to borrow your phrase, they're obsessing over the credit quality of big tech and hyperscalers. What do you think that spread widening is signaling to us?
The spread widening, to me, it's signaling that the market hasn't found the right risk premium to put on the tech sector. and the spread widening of the tech names, especially from recent issuance, relative to the rest of the investment grade world in the US, also tells me that because investors don't know, how to price in this risk premium, the best answer they have is to hide in non-tech, which is why you see a considerable richening of the non-tech space as well. And the market needs to get over this hump. It needs to, maybe the spreads on this tech space needs to widen to a point of almost ridiculousness for there to be, buyers who just think, even if they suffer negative free cash flow for a number of years, these are still ultimately investment grade names. In the back of my mind, they will, this capex will lead to returns and much higher returns than the market is currently expecting, and eventually we'll get over that hump. But I feel like the market needs to push those spreads to a bit more of a brink than it has done so far.
Amy, always great to have you. Amy Shea Patrick there, head of income strategies at Pendal Group, joining us out of Sydney. And the subscribers can also turn to the terminal for more, of course, for that Bank of Japan decision. T-Live Go is up and running, your function for the day, for the latest updates plus commentary and analysis from our expert editors. This is Bloomberg. Some other big news that we're tracking for you today. Bloomberg's been told that assets at Leopold Aschenbrenner's hedge fund Situational Awareness have fallen to about $10 billion after Citadel acquired much of its public stock portfolio. Sources say that's down by more than half from recent months. We're told the fund began liquidating some of its equity positions after suffering losses in the recent AI stock rout. Anthropic says its AI models breached 3 organizations during recent cybersecurity tests. It comes a little more than a week after its chief rival OpenAI disclosed a similar incident. In a blog post, Anthropic says it found 3 instances in which its cloud AI tool assessed the internet and then accessed the internet and then hacked into external organizations. The affected organizations are not named in the post. South Korea's 6th largest asset manager is urging investors to steer clear of leveraged and inverse ETFs. Korea Investment Management CEO Bae Jae-kyo warned that the products can quickly lose value in volatile markets because of daily rebalancing and compounding effects. Bae calls the strategy an unreliable way to build long-term wealth.
Yeah, stocks go up and down. Korean assets are headed up substantially as we speak, separately, but certainly timing is peculiar and curious. You have this announcement that South Korea plans to inject nearly $14 billion into its sovereign wealth fund for strategic investments into the AI space, data centers, and also infrastructure. The move expands the fund's mandate, which is the interesting bit as well here, to include domestic assets for the first time. Let's bring in Haram Lim, our Asia credit reporter, to tell us more details on this. Haram, could you explain what the government is trying to do here?
Right. Basically, the government is trying to create a $14 billion fund that will invest in sectors that's really critical for the AI era, such as data center, software, tech, infrastructure, even to energy, defense, and aerospace investment. So the methodology, how they will do this is that they will create a new account in already existing Korea Investment Corporation, which is the nation's sovereign wealth fund, to independently manage all of these investments. They will start with 20 trillion won, which is $14 billion, and KIC will do the investing based on the relationship they have with global investors and also with their expertise. The method, the government specified that the method would be providing long-term, so-called enduring capital onto these industries, and that this account, like KIC with the new account, will participate as a strategic investor and also doing investment that's really critical for the AI era.
Okay, tell us more about what this means for the sovereign wealth fund then.
Right. So it is really important role that Korea Investment Corporation has been given. So basically, the government said Korea Investment Corporation will be an anchor investor. That means like Korea KIC will take the lead on these investments with these global investment firms, global money managers, and also overseas sovereign wealth funds. Korea Investment Corporation will kind of helm this kind of these investments and really help the country to lure global capital into Korea's AI industry. And also, it means a lot for KIC as an organization because KIC in Korean Investment Corporation has typically always invested in foreign assets only and with foreign currency to kind of manage the foreign currency reserve that Korea have. But with this new mandate, they will be able to do the domestic investments for the first time, and it will mean a lot for the domestic markets as well.
Now, we know what's been happening in the Korean stock market. You know, the fact that we're up 15% today only takes us back to levels on Tuesday and Wednesday is just indicative of that. Is there a link between this announcement and what's happening in the markets there?
Of course, we cannot ignore the timing here because we all know Korea equity market has been experiencing the record rout and extreme volatility this week, although it's going 2 digits up. Today, the Kospi is going more than 10% up. But it is hard to directly link this announcement directly to government's aim to stabilize the markets per se, because this is the strategy that the government has been seeking for to build a new fund for AI investment. This has been coming up in the government saying for at least months. So whereas it's really difficult to kind of directly link this, I do think we cannot ignore the timing, and also the government themselves said in the long run, this fund is definitely going to help the asset markets of Korea because that means more capital and more global money coming into this industry that experienced a sell-off this week. So I do think, although this may not be the pinpointed measure that government really came out to help stabilize the market, it will definitely have a long-term impact, similar to what the National Pension Service has on Korea's domestic FX and equity markets.
All right, Haram, thank you. Haram Lim there, our Asia credit reporter joining us out of Seoul on this big announcement here today. We're tracking also corporate news. Elon Musk is reportedly, according to the Journal, preparing for a separation of Tesla's China business ahead of a potential merger between the EV maker and SpaceX. For more, let's bring in our China correspondent, Min Lo. We're seeing, most of these EV stocks in China are lower on maybe on this news, but I don't know. Tell us a bit more about what this potential spinoff could look like and what's behind this decision.
Yeah, so according to the Journal, Elon Musk is potentially looking at either selling the business or even closing it down. And it's really to prepare for this potential merger between SpaceX and Tesla. And remember, SpaceX is a major defense contractor. They get maybe about a fifth of their contracts from the Department of Defense. So in the event of a merger, that means a defense contractor will have control of Tesla's China factories. It would gain access to the supply chain knowledge in China. It could gain access to data on millions of Chinese Tesla drivers, and potentially there could be illegal diffusion of dual-use goods like rare earth magnets, for example. So if this merger goes through, it's expected to face a lot of regulatory challenges from the Chinese government. So according to the Journal, Elon Musk has been instructing employees to organize the company with a laser between the Chinese and U.S. business so that in the event that there are geopolitical headwinds, the priority is to save the U.S. business.
And, the other concern, it seems, is Elon Musk is concerned over the potential impact on the supply chain if there is an invasion of Taiwan.
Yes, and according to the Journal, Elon Musk is sort of preparing for this eventuality or insulating the company at least before 2027. He's concerned that there is reliance on China for certain supplies, particularly the lithium iron phosphate battery cells, as well as access to TSMC's chips, which could be under threat in the event of an attack. So starting from the first Trump administration, Elon Musk has already started to move some Chinese suppliers to Mexico, and it was beyond the tariff reason at the time. And starting from 2025, the company also started to wean U.S. factories off of Chinese suppliers. Of course, Trump's tariffs the tariffs are an accelerator of this, but also the incentives to reshore production. But of course, this will have huge implications for Tesla, right? Because China is its second largest market, so it's going to have a major impact on the valuation of the company as well in the event of the merger.
Min, thank you. Min Lo, our China correspondent there. Before we head to the break, just a look at Japanese markets. We are on the lunch break, of course, on the cash markets. The yen, of course, is still trading as we await the BOJ decision. Could come out any time now. Also look at equity markets, and it's really a story where we talked about Korea. Onshore markets are also doing very well today, 1.2% to the upside. Dollar yen has now retraced half its steps back to the pre-suspected intervention level. So lots more ahead. This is Bloomberg.
Well, European football's governing body is threatening to boycott FIFA competitions over plans to sell stakes in a new commercial entity to outside investors. Now, UEFA says the World Cup, according to this statement, should not become an investment product. The European body has 55 nations, including reigning world champion Spain, voting on the proposal, which could derail FIFA President Gianni Infantino's plans. Yeah, what do you make of this? Our football analysts.
Oh, here we go. I wonder if a rogue picture is going to come up again. Please don't.
We didn't.
But it's the, it's... So my initial take was the World Cup already makes money. It's not as if they needed a bailout.
Not as if they need more money.
They
already made a lot of money in the World Cup, this recent one.
Yes,
right?
and to hold another World Cup, they don't need more private funds. Now, of course, there's a commercial aspect to the business. There will always be money to be made. But the fact that the reaction has been swift, and here's why the UEFA, which is the European Football Association, is important, right? Because if they're not supportive of this and they say none of their members are, what is a World Cup without the European teams? And now you have, of course, CONCACAF, which is North America.
And they might want to sell the World Cup too. Is that kind of the speculation? If they do,
I think I'm not too familiar with the details, but they want to carve out parts of it to make it to get private money involved. But it's hard to see how they could proceed with this and the World Cup remains viable in its current form if there are no European sides involved, right? Because otherwise it's just like who else is participating? Now we haven't heard from the South Americans, of course, where a big bulk of the champions and the quality comes from.
Yeah.
But I would imagine CONMEBOL, which is the South American Association.
I think you add to the drama around what happened during the last World Cup and, what happened with that red card with Balogun, right?
Yes.
And, Infantino has been facing a lot of controversy of late here. So this just adds to it, right? And I know for the purists out there, it seems like he's blurring the lines, right, between the sport, money, power, and really, this relationship, of course, with President Trump as well. But so my friend told me the other day I sound very awkward when I talk about sports, so I'm going to leave it to you now.
Because it's for the fans. And by the way, you don't sound awkward.
Yes. I try. You hold your own. I try to learn.
Yeah. There's an opportunity to learn here on the weekend in Hong Kong. Because it's the Hong Kong Football Festival, and I think you have 4 really big clubs here in the city. It's the summer, of course, so they do tend to do these tours. And in case you missed that and you're in Hong Kong and you're up to battling the horrible weather out there, I think it's an amber rainstorm right now. Man City, Chelsea, Inter Milan, and Juventus are all in, and they're playing each other as well over the course of the next few days. I haven't looked at tickets yet, but I heard they cut prices as well, but opposite to what happened in the World Cup. But
anyway, I've been told that we need to move on. And talk a little bit more about what's going on.
Is the BOJ out yet? No,
not yet.
Not yet.
No.
PMIs.
But let's recap the PMI. I mean, out of all the news flow today, we kind of overlooked this, but it was actually kind of a pretty sore number, or at least a soft number when it comes to the manufacturing and non-manufacturing. we are seeing once again in contraction. So non-manufacturing at 49, the estimate was supposed to be 50, and manufacturing was also at 49.2. So it has started to see signs that maybe, the slow summer, does that prompt more urgency now for some sort of rate cut or something after what was a pretty disappointing Politburo meeting, what came out from that readout?
And I think BI thinks that could be in late September, will be the next key window for policymakers. But by the way, right, late September 2024, we know what happened then. Do we get the same thing? Perhaps based on the news flow recently, we might have to pare that back. But suffice to say, it's a big one. Lots more ahead on Bloomberg Television, including the BOJ. We're waiting for that. Thank you for joining us this week. We'll see you all on Monday.